Bitcoin income ETFs need active management, and we're going to explore why in this video before you go and plow a whole bunch of money into them and save you potentially some heartache. We've had some significant releases of Bitcoin income ETFs. We've had YBIT, BTCC, Bitty, Baggy, BCCC, and all these sort of basically Bitcoin volatility harvesting ETFs. And we have IBIT coming out soon with their ETF that they announced last month. So there's a lot going on in this space, but what does it all mean? When we look at a bit of an overview of these products, YBTC, YBIT, Bitty, etc., they've all generally been released very, very recently. They're all basically covered call exposure income products with some, subtle changes in how they do their covered call strategy, but fundamentally, because of ETF disclosure rules and how they work, they can't operate pure black box sort of hedge fund activity. They have to do a set, almost mechanistic approach, and they're essentially all covered calls of some sort of spectrum. Now, the investment return data is still a bit sparse. It's hard to say where they sit in terms of investment returns, but we can look at their charts, which we're going to have a look at now. Here we have the 6 products. We've got Roundhill, Yieldmax, Grayscale, Global X, Amplify, and their various products. And they've been trading for a reasonable amount of time now for some of them, and some of them are so quite new that it's pretty hard to sort of say where they're going. But what we can all safely conclude is that their capital values are down substantially versus just a standard Bitcoin hold. Now, that is perfectly fine if the income that you derive from these products pays for that NAV erosion. But what we've discussed previously in tremendous amounts of my videos is that this NAV erosion is really difficult, and it becomes very extreme when Bitcoin's price goes down. And what we can see here is during the bull run of Bitcoin for this Roundhill product, we generally had a flat NAV, and then as soon as the bear market sort of kicks off, NAV starts falling off a cliff and we're down 60%. Not ideal, while Bitcoin remains up 60% from the time that it issued. So that is concerning, and that income has to pay for a massive, massive NAV erosion gap. And what we can see here is the yieldmax one just sort of in free fall, down 75%, while Bitcoin has broadly held its value throughout this time that it's been alive. And we've got Grayscale here down 55%, while Bitcoin's down 18%. Now, these products all have and exhibit tremendous NAV erosion, and I'm not convinced that that NAV erosion pays for the dividend premium that you receive. So we can safely conclude that these Bitcoin ETFs are active investment propositions. They are not buy and hold products. So what is the point? Now, we have discussed this previously in a lot of my older videos, especially talking around MSTY, that these products are not buy and hold products. And if you were to buy and hold them, things would go really badly. And that's exactly what's happened traditionally. Now, what you have to do is take an active approach. And what we know is that these products do not have a clear inverse product where you can go short and receive an income when Bitcoin is going down, unlike MSTY-WNTR, which you can do the inverse. So you have to choose Bitcoin ETFs or cash. And what is the point? Why would you do this? Are there superior ways to do this? And I would say yes, but you only with a framework, right? You can do it yourself, and doing it with a framework is a really powerful way to do this. Doing it yourself is often superior, as you can embed that timing into what you're doing yourself without having to faff around deciding whether you should hold cash or Bitcoin ETF or yada, yada, yada. And I'm going to show you how you can do this using the Mangosteen framework. Okay, so here is the Mangosteen original framework. Now, what we can see is that we take nice bearish calls and bullish calls, and we have a little bit of chop while we try to identify trends early. And then we come down and we have captured a really, really great last 12 months or so. And this product is really well proven with Bitcoin. And what you can do is, if you want to simulate the Bitcoin income approach using this framework, all you have to do is when you're bullish, you sell puts, and when you're bearish, you sell calls. And so if you're using a platform like Deribit, the framework goes bearish, you just sell a put, and then you ride that down. And if you want, you can hedge it out if you want to faff around and make it more complex. But basically, if you're bearish, sell call, and then as soon as you're bullish, you just sell a put. And generally, these will work out for you quite well, and you won't lose your face. Or you can, when you're bullish, buy a call, and when you're bearish, buy a put, and that would be sort of the convex opposite strategy, and you'd get these massive incomes, or massive trading wins every now and then. But that is the trick to trading this approach and using it to generate income rather than faffing around with those covered call ETF plays. The alternative approach is to use these covered call ETFs. So for example, the Roundhill one right now, right? And when you see that the market is bearish, so here or here or here, you can use the Mangosteen framework to decide to sell this asset and stay in cash. And then when the market bottoms and you're ready to go back in, you can buy and ride up some gains like that. And when the market's flat, you can generate some income as well. So the trick would be to either use a manual option writing approach yourself using a platform like Deribit, or to use these covered call ETFs and use the Mangosteen framework to get yourself out of it and back in when the market is favorable to that. And that could be a really powerful way to do it. Now, the ultimate way is obviously to use the MSTY-WNTR approach, where I have that specific product. So this is the MSTY-WNTR rebalancing tool, and this will put you in winter at the right time and then MSTY at the right time, and we can put the MSTY and WNTR products. So this is off MicroStrategy, but you can see here that it told you to balance into winter, and you would have written that down to winter, and you would have held this winter price rather than getting absolutely annihilated on the MSTY price. So that is the trick with these tools. And that is how you can do it using this framework. Now, if you're interested in these, go and check out my website, mangosteen.global, and you can find them on my Mangosteen private subscription. So if you're interested in playing around with covered call ETFs or the MSTY-WNTR covered call ETFs or Bitcoin and MicroStrategy in general, Mangosteen Private is probably for you. I would recommend going and checking out my approach. It is currently a 2-year license. Obviously, it'll move to a 1-year license eventually, so it's basically a 50% discount at the moment. You can find it at mangosteen.global. There is a 14-day no questions asked refund policy, so if you check it out, you buy it, and you decide, hey, look, this isn't going to work for me, then you can always flick me an email and I will refund you. Get in touch at hello@mangosteen.global. Now, of course, this channel does not provide financial advice or any advice of any kind. Everything here is general information only and for entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only, and you do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.